Good morning, Core London. Last time, based on the daily chart, I recommended to buy the dollar yen on a pullback to 113.20 with a profit objective at 114.70. Last week, the dollar, you can see from the daily chart, retreated to 112.96 and then ratcheted higher to last Friday's post Non Farm Payrolls high at 114.43. And yesterday morning, shortly after Asian opened, the dollar yen briefly jumped to a 7.5-month high at 114.74 after BOJ Governor Kuroda's dovish comments. So the target was nicely met, but the dollar has retreated because of the falling US yields. So what's the outlook in the coming days or coming 1 to 2 weeks? I think that, as I said before, the dollar yen's move is closely related to the US Treasury Yields. So although that the benchmark 10-year has made a high at 2.477%, it was a 7-month high, and currently is around 2.327%. As long as the US 10-year holds above the previous support at 2.273%, I am still bullish on the dollar yen, and perhaps that if we do see the tax reform getting put through to the House before the Thanksgiving on the 23rd, I think that should be a supporting factor for the dollar overall, and the dollar index is still trading just below its 3-month high at 95.15. So I am still optimistic that the dollar, not just against the yen but against the other G7 currencies, will continue to move higher after a bit of consolidation this week. So once again, I think that my recommendation would be to buy the dollar yen again at the previous rate 113.20, and we can aim for a slightly higher target at the psychological 115 figure. If we can close above that, then we can move higher to the next daily resistance at 115.51. And stop loss on this bullish trade is at 112.70. Because if we close below the previous reaction low at 112.96, the last week's low, then the risk would shift to the downside for a stronger retracement of the up move, which started in September at 107.32. It was a 10.5-month low, basically this year's low at 107.32. So the risk would point to the correction towards 111.65 if we close below 112.96. Now let us look at the medium-term outlook on the dollar yen, which is maybe to some a bit boring, because you can see from the weekly chart we have been swinging broadly sideways this year, basically in the last 10 months. But however, yesterday we saw dollar yen hitting a 7.5-month high at 114.74, breaking the previous resistance at 114.49. So the next upside target is 115.51, and if we can close above that, just got 550 on a weekly basis, then a retest of the previous high at 118.66 will be seen, but obviously not this month or even the end of the year, but probably in the first month or February next year. Maybe because of the new Fed, the market may look for more dollar supporting factors to push the dollar broadly higher. So the recommendation again is to continue to buy dollar on dips So I think that on the daily chart, the support at 112.96 is the first support to watch. But for medium term, the support would be 11165. As long as we hold above 11165, then we can expect a push to 11550, and then 118 in the early part of next year. On the downside, if we close below 11165, then the bullish scenario, I think, has to be reviewed completely, because the downside risk would point to a push back down to 108, and then the 107.32 low that we saw this year. So good luck.